JSW Steel, now India's largest steel player. So let's welcome on board Mr. Seshagiri Rao, Joint MD and Group CFO at JSW Steel. Mr. Rao, great to have you on the show. From the big investors to commodity traders, Mr. Rao, everyone is labeling the current momentum in steel as a super cycle. What is it that's making steel prices go up only higher? And given all that we are seeing in India as well as globally, do you really think this super cycle is going to be a prolonged one and not just temporary in nature?
The way it appears to be today, the demand is quite strong. Second is that there is a lot of supply side constraints we are seeing, either driven by second wave or third wave of COVID in various countries, and the raw material supplies. These two are limiting the overall supply increases in various countries. Over and above that, the demand pickup, which we are seeing across, majorly through stimulus by government. These two together, I think we are seeing a very robust increase in prices. How long it will continue is anybody's guess. Why I am saying so is, if I look at December 2020, production across various countries versus capacities, there is a surplus supply of close to 120 million ton, including 40 million ton from China, which can come into the market, compared to the peak of the production that has happened in those countries. So therefore, the supply can come into the market. If that comes in, I think there will be some correction in the prices. So how long it will continue is anybody's guess. But as on date, what we are seeing is demand is strong, supply is constrained. The third is raw material supply is limited. Taking all these factors into account, I think this current situation will continue for some more quarters. That is what we are seeing.
Sure. China has hit the brakes on steel production as far as we understand in its decarbonization push. US steel demand in turn will be accelerating post Biden's multi-trillion-dollar infrastructure package that got announced just last week. So wanted to understand whether or not the steel crunch problem is that exacerbated, and is that also causing prices to go even higher perhaps?
Yeah, that is the issue which I am talking about, is supply side constraints. Supply side from China due to decarbonization, as you rightly mentioned, and also the policy-driven constraints or restrictions on supply, where they wanted to limit the total production to the 2020 level. Whether they will do or not is anybody's guess. But as on date, they have been highlighting that the production for 2021 calendar year will be limited to 2020. So limited supply of steel from China and also across the world for various other reasons. That is causing the spurt in steel prices because supply is constrained and the demand is strong.
Mr. Rao, you do have some assets in US. How do you see the new spend or the new infrastructure plan of US administration boosting your US business?
So in the USA, we have restarted our electric arc furnace after revamping in Mingo. And the Baytown also, after the phase 1 refurbishing of the plate mill, we have restarted. So we are coming at the right time where the demand is looking better. And also the infrastructure stimulus, which is being worked out in the US, close to over $2.3 trillion. Out of which $800 billion is earmarked for roads, bridges, and other infrastructure. So this is a great opportunity for steel companies in India to meet in the US to meet the growing demand there. I think at the right time we are in the market with the more supply into the market, and also integration between the Mingo Junction and the Baytown by supply of slabs to produce plates. Is also a very good opportunity for us to be in the market at the right time.
Mr. Rao, suddenly export realizations for a steel company are much better than domestic realizations, which is that if you're selling in markets outside India, you're making more money. Why do you think the domestic markets and domestic prices have lagged behind?
No, I don't think so because majorly Indian steel companies first meet the domestic demand. If any surplus or if any of the products where there is more demand outside and lesser in India, those products are getting exported. Particularly downstream, if I look at either color coated or the galvanizing coils or any of the other value added products with the surplus capacities in India, those products are getting exported. The focus of the Indian steel industry is to first meet the domestic demand. After that, the products where there is a limited demand in India, those products are getting exported. I don't think realization will drive the whole thing as far as the overall meeting the domestic demand is concerned. But you are perfectly correct in saying that the international prices or realizations today looking much better than the domestic prices.
Okay, recent reports suggest that we could see demand moderating given the resurgence in cases and restrictions on mobility as well. What's your perspective? We did already see a bit of a dip in Feb versus Jan.
No, the second wave of COVID, which is spreading much faster, and it may affect if the lockdowns again reimposed or restrictions come in various places. So it is a matter of concern that the people follow the protocols of the COVID and everybody will be very safe. Then only I think we'll be able to avoid the again lockdowns. If any lockdowns come, it is anybody's guess what happens to the overall economy and also overall domestic demand. So it is a matter of concern. But as on date, if I look at it, demand is quite strong. From January to March, January demand was 9.9 million tons. Similarly, if I look at the February 9.1 million ton, March even demand was quite strong. So overall demand in India, even in the quarter of January to March 2021, is quite good.
Okay, now BPCL's acquisition marks your foray into the eastern market as well. Plus, of course, you have Monet's plants which are located close by. Talk to us about the kind of synergies there and whether you feel you can actually remove some of those inefficiencies which made the BPCL, an IBC case in the first place.
BPSL is very strategic for us. It is on the east of India, east and north of India. So those markets today are being serviced by JSW from south and west of India. So it is very, very strategic to be present in those markets, which is growing and also it is rich in resources, very near to the resources. That way it is a good acquisition for JSW, BPSL. We have a 2-year plan to turn around as far as BPSL is concerned. So these turnaround we have kept as 2 parts. Part 1 is to reduce the cost. Today it doesn't have the full coke oven plant readily operating. Similarly, center plant is not operational. There is no PCI system. There are a lot of shortcomings which are there today. The projects to reduce the cost of production are not completed. So these projects will focus to reduce the cost. That is the phase 1 part. In the phase 2, there is a possibility of increasing the capacity from the current around 2.5 million ton to 4. So that is the second phase which we will focus. So overall, we are keeping a 2-year time period for turning around BPSL.
What will be the cost that you will incur for all of that, and by when will you be able to accomplish full utilization?
Cost of production from the current levels, there is a scope of reduction by 20%. That is how we are targeting to reduce the cost. Once these projects are completed over a period of 12 to 18 months' time, we will be able to achieve this cost reduction. The second is increasing the capacity. Simultaneously, we will take up some projects where the capacity can go up to 4 million ton. So that expenditure also we continuously or simultaneously be incurring while working on reducing the cost. So all this capital expenditure, both the phase 1 and phase 2 together, will be in the range of around 3,500 crores of rupees.
Sure. Your purchase price implies an EV per ton of 890 rupees, $890, I beg your pardon. What would you say to those who label this as an expensive buy?
Today, setting up a greenfield project is very long term. It may take even more than 5 years time. So if somebody wants to acquire a company which is operating right now and has a sizable capacity of close to 2.5, 3 million ton, I think the price can be justified from that point of view. That is why we were aggressive in the bidding for this asset. Number one is strategic, not being present in the eastern side. The second is it is readily operatable plant and possibility of increasing the capacity to 4 million ton. Considering all these factors, we have taken that call. So if I compare with any of the greenfield projects that will come up, I don't think this is expensive from that point of view.
JSW Steel funded the infusion of Piombino Steel, and what would be expected rise in debt because of the BSPL transaction?
These numbers will give when we come into the when we announce our results in the month of May. We already communicated to stock exchanges that the total exposure of JSW Steel by way of cash outflow is 5,080 crores. Balance amount is raised either in the holding company for investing as equity in the BPSL, and the balance is raised in the target company. That is how we funded the total 19,350 crores rupees.
Steel spreads have gotten to a multi-level high or multi-year high. How will this cash flow which you will generate because of higher realization affect your profits? Because you will reduce debt, and if you're reducing debt, the impact of that would be visible at the bottom line level.
We have been communicating the relative ratios we focus than focusing on the absolute number. That is the 3.75:1 debt to EBITDA and 1.75:1 debt to equity. So we are well within those parameters while doing inorganic and organic growth that is happening in the company.
What about the Dolvi project as well, the expansion project and the operational capacity you see at the end of FY22? The plan to bring it up to the targeted level, which was, I think, 45 million tons?
Projects we have taken up in the last 3 years. Many of them are getting commissioned or already commissioned, like pellet plant at Vijayanagar and also zero power furnace, that is SMS3 modernization. There are some of the CRM1 expansion at Vijayanagar. These projects we have already completed at Vijayanagar. In the Dolvi, again, pellet plant is already commissioned there. Blast furnace is under heating. Hot strip mill, we have already rolled some plates in the hot strip mill before 31st March. It is very, very advanced stage of commissioning. I think in the next 1 or 2 months' time, we will be able to run the operation on an integrated basis, starting from pellet plant to the hot strip mill. That is how the plant will start operating in the next 1 or 2 months' time. That is the status of Dolvi. So Dolvi capacity will go up to 10 million ton from existing 5 million ton. So overall capacity of JSW Steel in the existing operations will go up from 18 to 23 million ton in the next 1.5 months' time.
All right. Thanks so much for joining us, Mr. Rao. Always good chatting with you and hearing out in detail what's really on the cards for JSW.